Start with the Brent futures, which have slipped below $110 a barrel on worries of a slowdown in the demand growth in China and the US. Also, the recent strength in the dollar is weighing onto the sentiment. On your screens, 0.25% down, but 110 has been breached on the lower side now by the Brent crude prices. Let's get NYMEX on screens as well, and the decline there has been sharper. Both these crudes actually are down nearly 6% from their highs seen in the month of Jan. NYMEX holding around $92 per barrel on your screens there. The gold prices in the meanwhile have inched up sharply today, struggling to break above the recent range as improved economic outlook and the stocks rally capped sentiment for the precious metal. But the physical buying in Asia is lending some support, and the investors have continued to pull out of the gold-backed ETFs in the international markets, drawn by a record-setting rally in equities. On your screens there, a good $15 of a smart move coming on the higher side for the gold prices. $15.95 is how that one is trading. Let's get our experts in then, and joining us on the show is Sugandha Sachdev. She's in charge metals, energy and currency at Religate Commodities. Also joining us is Vijay Bhamwani, who's author and CEO at bsplindia.com. Sugandha, hi, let's start with you first, and your view on the kind of jump up that we have seen in case of the gold prices. Are you looking at 1600 breaching today evening?
Hi Manisha. In case of gold prices, we have seen a significant price erosion in the recent past, and prices are hovering around $15.50 an ounce in international markets. I do feel the strong economic outlook from US, be it the recent non-farm payroll data, that weighed on prices as it hurt the safe haven demand for gold, and prices were being trading choppy. But then as of now, if I talk about the current scenario, I feel they are shaping up for another upside rally. So I feel prices are trading higher towards a level of $1600 an ounce in international markets, and in M6 too, they are forming a base around 29,100 mark. So I feel for the day, one can go in for long positions at levels close to 29,400 mark, keeping a stop of 29,280 on the downside, and prices are poised to move higher towards 29,700 mark.
Sugandha, which one are you choosing between gold and silver? And coming for silver and levels as well, how would you want to trade that one?
I would choose gold, because in gold I see a very strong pattern emerging. I mean, also if we see the recent downgrade of Italy, that is also likely to help the safe haven demand for gold again coming into picture. So that will support prices. Also, the industrial production data from China was also very weak, which is also going to help gold prices. And we also are likely to see some physical demand coming in for gold. As far as silver also, I'm expecting some upside rally, but then unless and until the level of 55,500 is M6 is breached convincingly, I'm not too bullish on silver prices.
Vijay, what's your sense coming in for the precious metals? The last few hours, couple of hours to be sure, have seen strong gains coming in. I mean, it's on the positive data also coming in from the Europe, but do you think this will sustain in the US session as well?
Sustainability remains a question mark, Manisha. I think there is an overhang of overhead supply in the absolute near term. Let's also not forget, after a protracted slide like this, I would not call it a vicious decline, because it's been a slow and steady grind. When the bulls do attempt to pull prices higher, there are a couple of abortive rallies. So the bulls might just have conviction to buy at lower levels, but it's not likely to be a V-shaped recovery. It's going to be more like a couple of W's built into place together. So I'm not expecting sustainability at this point in time, but I would rule out a very major downside from here in the absolute near term, unless any fresh trigger kind of emerges at this point in time. I would still lay off leverage segment buying at this point in time.
All right, but with saying that, it's nearly 1% of a gain coming in for the gold and silver, both those prices in the international markets, and our markets clearly mirroring that. So, Gandha, let's talk about the crude prices, and the declines have been there as well, even as we have seen positive data come out from much of those economies. Again, the question really has been of sustainability. At these current levels, when the Brent prices have reached that important psychological 110 mark, how would you want to trade?
As far as NYMEX goes, I'm actually tracking NYMEX. I'm not tracking actively Brent. So I'll talk about NYMEX prices. If we talk about NYMEX prices, they are languishing around $90 a barrel in international markets. And I feel there is some base building formation going on there. But yes, the increase in production by Saudi Arabia is capping prices on the higher side. But then I feel in case prices are able to breach $92.5 mark, I think we are in for an upside rally. As far as M6 goes, in case of M6, prices are facing a strong hurdle at 5010 mark. So once prices are able to convincingly breach reach that mark, I feel there should be a rally up to 5070 to 5090 mark on the higher side. So for the day, one can go in for long positions above 5010 mark, keeping a stop at 4980 mark.
Vijay, what's your sense coming in for the crude prices there? The Brent is down, the NAMEX is up, and the natural gas price is also holding slightly firm.
Manisha, I'm more enthused by natural gas, relatively speaking, because it's staying above or near that higher end of the range that I've talked about in the last couple of trading sessions. That is 191 on the downsides and 198, 199 on the upsides. We have basically seen a feeble attempt to breach the 200 mark, which has not yet worked out so far. But I think a close at or above 200 will basically rope in a lot of doubting Thomases onto the long side. I'm talking of a very short-term view here, a couple of trading sessions at best. It might also trigger a very near-term or short-term of a short duration bear squeeze, which can take natural gas up to 205, 206 if the bear covering is fairly protracted. As far as crude prices are concerned, I see resistance coming in at 5040 and then 5075 levels. So unless those levels are taken out, I don't see how crude can have a sustained upthrust from here. It could be a technical pullback for sure. It could be a short covering base rally for sure, but sustainability remains a question mark. Relatively speaking, I think natural gas might just surprise if it starts to trade above the 200 levels.
Watch out for those levels then. Sugandha, let's talk about the base metal prices. There are those concerns coming in from China. There's no policy clarity coming in from that one. The Europe also has its issues. We have seen Fitch downgrade Italy onto that one. How would you look at this sector?
In case we talk about the base metal pack, prices have been gradually inching lower. They have been hammered down badly in the recent past. The concerns about the Chinese economic are hovering, actually weighing on the prices. But yes, I feel there are some contrarian calls that are emerging in the market. Market is showing some base building at lower levels. So I would like to take contrarian calls for the day. In terms of copper, I feel prices are finding some support around 420 mark. So one can look for long positions at 421 to 422 levels, keeping a stop below 420 mark, and prices are headed towards 428. No doubt, I would like to add a word of caution, as the economic outlook is not very strong from the Eurozone as well as from the China. So upside rally, is not going to sustain. Rallies are likely to fizzle out at higher levels.
Vijay, how would you look at something like a nickel or a zinc? Because we've seen very sharp declines onto that one as well, and these metals are trading at a 3-month lows. Do you think it's a good time to start picking on them?
I don't think so, Manisha. I think this kind of a decline which I talked about in the last couple of weeks. Yesterday I elaborated upon how the decline has been fairly excruciatingly slow, and the drift is so slow that a trader who's looking at absolute return on capital is seeing a frustrating amount of money, a small amount of money being made on the margins and the span margins, mark-to-market margins being deployed in the trade. So there is also this overhang of cost of carry which will be borne by the bulls. So buying at this point in time for a positional trader is ruled out. If you want to do a little bit of high risk aggressive bottom fishing, maybe nickel at 111, 112 odd levels might just give you a pop of maybe 5 to 8 rupees. But then unless it actually starts to trade above the 938 to 944 band, I don't think nickel is showing any signs of strength. Where zinc is concerned, I would stick by my view that 108.5 is a level to watch out for. Unless the price goes above this hurdle, I would not want to go on the long side at all.
All right, so that's the view coming in for the base metal prices. With that, we let you go, Sugandha. Thank you so much for joining us with your strategies on all of those commodities.